Alrighty, guys. So today's Real Estate with Victor video, today's Real Estate with Victor show, I wanted to make this, and I want to make this plain because I said I was going to do this today. And I went out to a property today. It's in San Diego. Beautiful piece of property. It's on the market. No asking price, but I'm going to run you down the line about how we're doing it here at Bell Capital and how I pick properties for our fund. All right. So, for example, this is a 75 unit deal, and I'm just going to run the numbers right here because it'll make sense. I want to make it sense. I want to try to keep this simple. If this is confusing, reach out to me. Feel free to give me a call at any time. You can call my number. It's 808-778-1326. We can talk about anything that I'm doing and also talk about how to get you involved in what I'm doing. All right. So, first thing we're going to do is we're going to go over I love this stuff. I love looking. First, I love the property. That's number one. I saw the property. I love the property. It's on a corner in this great location, like around tons of shopping, it's in a great B-class area. Man, it's perfect. It's like 5 acres, 75 units. It's already been renovated. It's beautiful, right? Great trees. Man, it's really nice. I love it. I love the property. I would love to own it. It's going to be an asset that's irreplaceable. It is not going anywhere. It's not going to be destroyed. So that's first. Next, I had to look at it like this. All right. So we'll take $1,800 as the average rent. There's 59 two bedrooms and the rest are ones. All right. And the two bedrooms are renting for like $1,900 or $2,000, and the one bedrooms are running about $1,700. All right, to $1,800. So I took the average, which is what they said, $1,770. So I bumped it to $1,800 because that's about right. So $1,800 times 75 units is $135,000. We annualize that, 12 months. Everything in real estate is 12 months. It's run by 12 months. All right. So that puts us at 1.620, all right, million. That's our income minus a 5% vacancy, right? 81,000 minus our expenses, minus 35% for our expenses, right? So, and we're at 35% for expenses. Hold on, times 35%, so I can give you that number. We're at 162. Hold on, 1620000 minus 5%. All right, so minus 35%. That was our expenses are 538,650. Boom. These are NOI at 1,000,000. Boom, 350. All right, so this is our NOI. That's what we're working with. In that area, I know 0.0425 is the cap rate. So we'd probably be in and around 23 million on our offer. Right? So 23,000,005. That's probably what they're expecting. It doesn't mean that's where we're going to buy it for, but that's what they're expecting because that's a typical value. But let's say for this video, for training purposes, how we look and find out if this is a good deal for us or not. So right off the bat, we're like, okay, fine. I already understand we're probably going to end up putting about 35% down. That brings us to about 8.2 million on our down payment, right? And at 23, we'll just keep it at 23.5, right? Minus 8.2 million. Our debt, we're going to end up getting debt on $15.3 million, all right? And on the average, on a property like this, we can probably get at today's market, as it relates to rates, our debt, that $15 million, our debt service is going to be about $642,600. All right. So when I know what our NOI is, so our NOI minus 1 million. Minus 1 million, boom, 350. That puts us at, so our cash flow on this deal after debt is 357,750. And if we were putting down that 8.2 million, that gives us a 4%, 4.3 cash on cash return in the first year. So I love the deal. Here's why. Because I know right off the bat we're going to be making cash flow. We're going to make 4% return on our money. Everybody that's in the fund, at $8 million, when we close this deal, on a deal like this, we're automatically going to get that. But here's what I'm looking at. Here's the exciting part for me. I know that over time, we can easily. Do you guys think that San Diego County, in San Diego metro area, all right, that at 2 bedrooms they could be from $1,800 to $2,000? Do you think over the next 5 years, rents in San Diego County will be, let's say, $2,500? So let's say $400 from there. So if we were to add $400 times 75 units spread out over 12 months, that gives us $360,000 annual on a rent raise. And let's say we only get 5% of that. That's $342,000. Hold on, I don't want to lose my camera. So that's $342,000 of income that we created. Now, on a 4.25 cap rate, we've created $8 million. Can you see that? Can you see that? We've created another $8 million. That's what we came in at. So right off the bat, this is a great deal because over time of raising rent, that's what we're playing for. While we're doing this, we're getting 4% a year, 5% a year, 6% a year, 7% a year, and all of a sudden, bam, we can exit out our property. We sell, get our down payment back. We get this back, right? And then we get plus another $8 million on our exit. This is the game. Because think about it. Even if we were to buy this property, where's the offer? At $23 million. Let's say we could get in this deal for $23 million. Do you think at some point somebody's going to come around and offer us $31 million for 75 units in California, in San Diego, in one of the greatest states in America? Don't you think? I mean, in California, like think about that. So, I mean, and even from that perspective, let's take that number. See if it sounds really far off. That $31 million divided by 75 units, that's $413,000 a door, roughly $413,000 a door. Now, there's places that are already selling for that, right? And it's below replacement cost. There's already apartment buildings, smaller apartment buildings. I know specifically, there was a guy I sat next to at an event. He's buying apartment complexes at $300,000, putting $100,000 a door in them, and then keeping them. 10-unit buildings closer down by the beach, right? So he's already buying for $400,000 a door. We're getting them for way less than that to only turn around and potentially just have somebody just come and say, hey, we love the property. We'll pay $31 million for it. It's stabilized. It's already doing well, right? This is the game. This is how this works. And this deal, I think this is a great deal. I'm going to actually make a run at this deal. It's probably going to be, I'm going to come in probably about 23.5. I'm not going to bicker about it because I know for a fact buying a $23 million property for $8 million because the bank's going to give us the rest, knowing that we're going to get a minimum of almost 4.5% cash-on-cash return on our money, to just hold on to it until we double our down payment, which is about $8 million, before we say, hey, we're going to sell this thing, man, that's a great deal. We will not lose money on this particular deal. 75 units, San Diego, California, 5 acres, cannot be destroyed, will not go anywhere, buying it below replacement cost, and the rents are so affordable. People will always still be able to afford that, and it's near jobs, near downtown, is driving distance away from the financial district, from all these areas that are really great to me, all these precursors, and jobs are coming there. People aren't leaving that area. Nice cars in the parking lot. Other properties are around it that look really great. Other competitor properties around it look great. It has all the precursors for what I love. But I wanted to share this with you. This is so important because if you don't know I know this looks like Scribble Scrabble, but if we break it down simply, just remember this. It's 75 units on the average, right now, on the average, $1,800 a door. Still affordable rent. The vacancies, I have my vacancy factors that I use, 5%, 35% in our markets. Gives a great NOI. The net operating income is $1,350,000. And if we were to use a market cap rates in California about 4.25 that I looked at, right? And there's some are lower, some are higher, but this is where this is. They don't really go past 4%, 4.5%. On the average, it's 4. I gave it 4.25. So right off the bat, I know we'd be targeting this price of a property like this at $23,500. I mean, $23,500,000. Not right off the bat, knowing that we're going to come in and need to put about $8 million down, and our debt service and our debt's going to be about $15 million. The bank is actually going to partner with us and bring in almost $15.5 million, and all we got to do is bridge the gap between the 8, because we know, boom, we're going to get a great return on our money. This is how this game is played. So I hope this helps. If you don't get it, watch this video. If you have questions, feel free to reach out to me. You can download my book. I have an apartment, how to buy or how to invest in apartment buildings and create wealth. Like, get as much information. I don't mind helping you. I want to show you exactly what I'm doing, how I pick deals, why I pick deals a specific way, and how really most of the things people are worried about. What's the cap rate? We need to get a higher cap rate. Like, none of that matters. Your cash-on-cash return matters, and can we double the down payment at any point? Can we go in, raise rents, make the place nice, be nicer to the tenants without making the place nice, raise the rent over time, and exit the property, and double our money while we wait. That's the game. So I appreciate you guys. I really want you to do this. Look, real estate's the game. Real estate is the game. That's the big boy game. You're buying assets. You're investing in hard assets that will not go away. They cannot be destroyed. It can't be done, right? This is what this is. And the greatest, like really, we're in California. Like, I believe in California. I believe in San Diego. I think it's a great place to invest in real estate. That value of property is always going to be valuable. The problem that people have with it is the barrier to entry to get in it is too big. This is how it is. Buy high, sell higher. I say it all the time. My best deals have come from Hawaii, California, Texas. Like the best deals are going to come from the places that the cost is so high because the exit, you get a big bang for your buck on the exit. All right. So, and I'll go over those things later. I'll have better videos. If you have a comment, question, please put it below. And let me know what you want to learn about. Let me know what I can help you with, what you want to. Let me know what's your, so that way I have what are they called? I have information. I know what to do for my next content piece for you guys. I really want to help. So I hope this helps you guys. Like this video, comment on this video, share this video with other people, subscribe to my YouTube channel here, share this with other people, and I really want to help you. If you have questions about this deal, the things that I'm doing in Bell Capital, I really want to have you involved. If you're a new investor, go ahead and register because we got something coming up, and I want to share that with you to kind of get an idea. Just an interview. We got to get to know each other first, right? You got to love real estate. You got to have a great attitude. You got to have some money to invest. You got to be ready to go. And that's important. Naturally, you got to be a good person. You got to be a great dude, and you can't be like, some dude who's always. You got to be somewhat lucky. You can't be a person who's always getting into accidents and hurt themselves. We don't let people like that into the fun. We don't want your bad juju. But anyways, I appreciate you. This is Victor Bell. Thanks for your time. Thank you for showing up on Real Estate Investing. I'm going to push that out of the way. Real Estate Investing with Victor Bell. Boom. I hope this helps you guys. Looking forward to seeing you all the time. And remember, man, be great. Welcome to my family.